Good morning, all. CamelbackTrading.org coming to you this Friday morning, August 7th. We're looking at the last 2 days of the SPY ETF's market profile here on Window Trader. And right now, with just 4 minutes to go prior to the non-farm payroll, we're trading right smack in the middle of the huge set of single prints as part of our double distribution, right? We had two sets of single prints. Here's your lower distribution. Here's the upper. Quite simply, it shows you why options can be very, very frustrating to trade in the SPY. Now, I know the other options, futures and stuff, trade at different times. But for argument's sake, I had 700 puts up here. Now, I'm not saying I would have went home with 700, but I certainly would have gone home with some if, A, there was no payroll number today, and two, and the more important one is, if I was able to trade these options till 8 o'clock last night when the ETF trades up to, or this morning. There is no reason in the world SPY options should not trade at the same time that the ETF does. Because I would have easily have went home with maybe 100 or 200 puts. I didn't lose any money on that trade. I battled my way. The trade I lost money on was an E period. But this morning, we got traded down to 332 and change. I would have gotten all that money back and more with even just the 100 contracts. So pretty frustrating. Something I'm going to try to take up with some of these discount brokers. Why don't they trade the options at the same time? All right, off the soapbox. Let's get to what's going on. So let's go over destinations, right? The number's out in 2 minutes. We'll see what we do when the number comes out. Right now on the upside, first destination is yesterday's high, 334.46, and then I gave you all the other ones last night. For the downside, right now we're going to use this everything, and you should have these also. So I'm just 331.61. The single prints get filled at 332.90. Then the second set, 332.76, get filled at 64. And then yesterday's low of 331.13 gets filled at 330.06. So what I'm going to do now is go to the charts just to look at those and then come back to the profile after the number comes out. Right now, pre-market high is 334.55. Pre-market low is 332.45. Okay, let's go to the charts and then we'll come back after the number comes out to see where we are trading. So I'll just show you the weekly and the daily, right? Weekly right now, just like on the triple Qs, we're one time framing up now for 5 weeks. So we're actually doing better than the triple Qs because this week they just came out of a 4-week balance, okay? We're getting distance away. So as long as we hold that distance and don't get accepted back into the last 2 weeks range, the all-time high really should fall in the near future, right? The gap was the only thing really standing in its way. And then on the daily, it's basically the same thing, except we have two gaps. Outside day up, that's pretty powerful, right? We had a chance for an outside day down after we took out the day's high, and then we took out the low, and then come back, rip high to have an outside day up. Pretty powerful. Volume, as you can see, horrible. Under 44 million. The last 3 days have been in the low 40s. So we've been doing nothing but basically going up, and the volume is horrendous. That's why it took so long to fill this gap. Can we get the all-time high with this type of volume? Of course we can. Is it going to be on poor structure? Most likely. So at some point, if you do not get the next time frame in, yeah, you'll keep getting you'll probably get the all-time high. You'll probably get a couple more gaps, but that's going to be horrendous structure, and at some point would all be taken back. Now let's go back to the profile to see what is going on. So the number came out, and here we are, right back, not far from where we closed, and that's another perfect example. So that's why I didn't go home with those contracts. If I went home with 100 or 200 puts, and I saw it trading down here the whole morning, and then at 9:30 we're going to open up where it's unchanged or it goes above and I lose money, that's just frustrating. There is no reason SPY options shouldn't trade at the same time as the ETF. Anyway, so what's the game plan? Okay. Right now, we're in balance in value at the upper end. You certainly have these single prints to lean on. So if we are to trade into this level, I would look to buy calls, right? The single prints, both set. First set gets filled at 332.90. The second one at 332.64. So I would look to buy 332 calls that expire today. If we hold at least one set, then we should be okay. If both sets get filled and you get accepted back into the initial range, initial balance from yesterday, well, guess what? Your next destination is yesterday's low. So I'd be out of that long. So that's why I'd be a buyer. As far as a short, really don't have one. I mean, if we were to rally and get close to yesterday's high and fail, I guess you could take one because you would probably trade M's range, right? M's range is very important the following days. So that's something I would look at if we were to open towards the upper end of the range and fail at the high. Maybe take a put. Remember, there's not much above us. We have the afternoon rally high, which is right above. Then you have that daily high and then the single prints from February 20th. So they're trying to rip higher. Again, we still have an hour. This could settle down or we can go higher. If we gap higher, then I would take a call play based on the size of the gap. My out would be yesterday's high. So again, or if we gap higher, fill the gap, get accepted into M, then I would take a put play to ride M's range down. Again, come to camelbacktrading.org's trading room and you're getting these up-to-the-date trades as it evolves. Have a great day trading, and we'll recap the day and the week at 4 p.m.